All right, so Fed Chair Jerome Powell just got done testifying before Senate for the Monetary Policy Committee, and he had some really interesting things to say about the housing market, what their intentions are with the housing market, housing affordability. Some of the senators also had some very interesting viewpoints on this as well. It's important to note that make sure, since the world seems to have forgotten what supply and demand and simple economics is nowadays, just make sure you keep that in mind while you're listening to this, because that is one of the things that they talk about in here. But would love to know your thoughts in the comments below after you watch this clip, and make sure you hit that subscribe button for more stuff like this. So check this clip out and.
Overall, prices have moderated considerably since the Fed began raising rates, yet housing costs have remained stubbornly resilient or high, leaving us really no closer to addressing the affordability crisis that I think that we have, and this was there well before the pandemic. Shortly before the Fed began tightening, Chair Powell, and you came before the committee, I asked you about how higher interest rates could exacerbate this unaffordability problem that we have by making mortgages more expensive and also hindering housing development. And I think that at the time you argued that we have a excess housing demand during the pandemic, and that was kind of at the root of higher costs, and that your goal, the Fed's goal, was to bring demand closer in line with supply. So my first question is this. So the housing market has cooled significantly over the last 2 years. Is it your view that it has cooled enough so that housing supply and demand is better in balance? And following on that, given the Fed's limited tools, understanding that, at what point will you think that you've done all that you can to lower housing demand? My view is that we're well past time in Congress to take action on the housing supply side, but I'm interested in how you see this dynamic.
So we're not focused so much on housing and housing inflation. We're really focused on the aggregate, which is also goods and non-housing services. That's way more than half of the PCE inflation. There are things in the housing sector that we didn't fully anticipate. One of them just was that people in very low interest rate homes with very low interest rate mortgages aren't selling.
Right.
So the quantity of homes that's available is incredibly low, and that's why it's very little in the way of existing home sales, and that drives up existing home sale prices, but also new home sale prices. So again, there's two sets of factors. It's the longer run issue, but
I just want to make sure that you guys noted that right there. There's an incredibly short supply of homes available. And one thing they didn't anticipate was people with these really low interest rates not selling their homes. So even though they were trying to, they weren't trying to crash the real estate market, but they were trying to soften it a bit. Is basically what he's admitting here. But he's even saying himself that like there were things that they didn't see. And this is what we've been telling you guys about simple supply and demand. Like there is just, I think in 2007, there were like 2.5 million homes on the market. Currently today, there's about 380,000 homes on the market. So, and there's 30 million more people in the U.S. than there was in 2007. So that gives you a synopsis of just the supply and demand issue that we have currently and why affordability is so low. But I'll keep playing the clip.
Then there's the factors associated with the pandemic and the inflation and our response to it. I think as the overall inflation continues to come down and rates then come down, you'll see the housing market start to heal and get better, and housing affordability should go up again. But you're still going to be left with the longer term problem of supply.
Right. I think that's right. I mean, what I see in Minnesota is that higher interest rates are, of course, driving up the cost of construction. They're driving up the cost of mortgage rates. You're seeing people who aren't leaving a house that maybe is a little too small for them because they can't afford it, that the housing, just as you're saying, people are staying in their homes longer. And so there's sort of this double whammy of construction slowing at the same time that there is this great need to address housing supply. One of the things that is happening, it's interesting, a recent analysis by Zillow found that the monthly mortgage payment let me get this right. A recent analysis by Zillow found that the monthly mortgage payment on a home, on a $343,000 home, assuming 10% down payment, is about $2,200 a month. Okay, so $2,200 a month, that means the cost of owning a typical home is higher than 30% of median income, which is kind of the measure of affordability. And so we've got a lot of issues with people just being priced out of the housing market. So from where I sit, the cumulative issues of higher mortgage rates are just really a challenge. And until we can get to the bottom of that, we're going to have a hard time addressing the housing affordability challenge that we have. Would you like to comment on that?
Yes, I agree with all of that. I mean,
One other thing before I let him continue is that, at the end of the day, I've been telling people for years, I'm a mortgage lender for people that don't know this, but I've always said that if I ever see that, like, I'm a huge nerd when it comes to the markets and the data, and if I ever see that there's a possibility of home prices dipping in the future or crashing or anything of that nature, that I will have an unbiased opinion. I'll go get a different job if I have to, but I'm not going to tell people that it's a good time to buy a house when I know that it's not, and when the data points to, when the data points otherwise. And right now, even he's telling you, there's nothing that they can do currently. They said that we're well past beyond the point of, fixing the supply problem. And even currently with these crazy high interest rates, which he also said early in his testimony, that he thinks that they're at the perfect spot for rates and they're only going to go down from here. So that just tells you that the demand's going to remain for the most part. And the only thing that's going to happen is that rates are going to come lower and affordability will get better, yes, but home prices are going to continue to appreciate. That's what he's telling you here. And that's what we've been telling you guys for years, and you didn't believe us. And I somewhat understand why people think the way that they think, but this time is just not the same. There's way too much of a shortage in supply. So I'm going to let him continue.
Home prices don't actually go into the calculation of inflation. It's really rents and
Right.
owner's equivalent rent. But I agree, the housing market is in a very, very difficult situation. And, the sooner we can get back to price stability and restore interest rates to lower levels, the sooner it can start healing.
Yeah, thank you. Thank you, Mr. Chair.
I want you guys to look me in the eyes right now. Right now and for the foreseeable future, the housing market's not crashing. They just told you this. They just said it. There's nobody to impress here. There's no clickbait here. This is a Senate hearing that you have to dig really into the weeds to even find. This is real truth and real data. It's not some realtor or mortgage lender spouting off nonsense. Like, this is real economic data. The people that are responsible for the economy of the United States of America have just said there's nothing we can do. We've been telling you this. And so just know that we're not lying to you. Like, we see the market every day. We're professionals, and I know I can only speak for myself when I say this, but if I ever think the housing market's going to crash, I'll go get a new job. I'm not gonna lead people into an 08 type scenario if that were to ever happen. But just telling you, there were 2.7 million homes on the market in 07, and there were more people than there were. There was less demand than there was homes. There's 30 million more people in the U.S. and there's 380,000 homes on the market. It's not happening right now. It's not happening anytime soon. They just told you that. The only way they can fix affordability is by bringing down interest rates. So just telling you, when those rates come down, all the people just like you are going to be waiting for rates to come down. They're going to go by, and then guess what's going to happen? Housing prices back up again. Hope you guys enjoyed this clip. Hit that subscribe button below for more real life economics. I'm going to teach America economics again, since we seem to have forgotten it in this country. So hope you guys have a kick-ass day. Peace.